Hi all, it's Catherine Burgess with Burgess Group Compass. We're talking about last week's Boulder County real estate numbers. Nationally, we're looking at the number of dual income households and the satisfaction post-move, and then wrapping up. So last week we had 66 new listings, and that was very much in alignment with what we saw in the last 3 years. Then under contracts, we were at 80, and that was actually higher than 2018 and 2019, a little bit lower than 2020. So from a month supply of inventory standpoint, we were at 0.79 months supply of inventory. That was very similar to what we saw 2 weeks ago. And the big difference is that the history of 2018, 2019, and 2020 is now in alignment with that number. So previously that was much lower than what we'd seen in the last 3 years, and now it's in the middle of what we've seen in the last 3 years. Then year to date under contracts, we continue to be about 200 higher than what we saw last year at this time, significantly higher than what we saw in 2018 and 2019. The real change with what we're seeing right now is in the price change numbers. So, and when I say the real change, I mean relative to the last 3 years. So we saw 22 price changes last week. And that is, as we've mentioned before, that's a coincident seller indicator. And that's telling us how sellers are feeling at exactly this point in history. So 22 last week. In 2018, we had 57. In 2019, 75. And in 2020, 40. So that tells us that sellers this year are feeling supremely confident, and they are not changing their prices much. That doesn't necessarily mean that those properties are getting sold, but it speaks to the seller mindset. So from a price band perspective, the 1.5 to 2 million had a high sell-through rate, as did 0 to 500,000. So those feel pretty thin. And then above 2 million, we had very low sell-through rates. So there should be more inventory for our luxury buyers right now. And then nationally, dual income households have gone down from 62% to 58%. So that's a pretty significant decrease, and that's pre-pandemic to now. And we are knowing that a lot of that is a result of people having to leave the workforce for childcare, people losing their jobs. 3 million people, according to the Fed in St. Louis, went into early retirement because of the pandemic. So all of these things have contributed. Many people moved to a new location to make that one income work for them, so a lower price location. And generally the surveys show that 83% of people who have made a move post-pandemic feel very satisfied with the results, and they've often got more space, better schools, lower taxes. They've moved to places where they can see a benefit, and that's why the migration has happened. So those national migration numbers are on the decline. They're still a little bit higher than what we saw in the pre-pandemic time, but they're definitely off of the high that we saw kind of April of 2021. So expect going forward, sellers, you will be in a strong position. There's likely to be low inventory. However, the number of buyers will be lower than what we saw in the past year. So those two things work together to determine what type of response the market gives to properties. So it's impossible to project out really in a meaningful way what the next year will be like, but we will keep track of it and be reporting back to you guys so that you can know what to expect. So please feel free to reach out with questions. We're happy to be a resource. Like, subscribe, and share. We will see you again in 2 weeks. Thanks.